Good evening, traders. This is Chris Buss with Traders Profit Compass with a closing market wrap for Wednesday, September 23rd. Okay, we had a really busy afternoon. Let's dig into the charts and see what we can find. Here we've got the daily chart of the UUP, which is the trading ETF for the US dollar. We had shown this morning the saucered bottom, and now we've had this breakout today, and you can see it's working into a thin zone here with a clear path up to 26. So if you'll recall, there's a lot of dollar shorts that were positioned for lower dollar. I think they're going to get squeezed out, and I think there's going to be a move higher. I don't know if it'll get all the way to 26, but the higher this goes, the more pain it's going to be for the precious metals and the commodity complex. They do not like a rising dollar. So let's look at gold. They pulled the rug here, 2%. Which isn't that bad compared to silver. But anyhow, we had talked about the idea of getting short against 180. If you got that, you're looking good. I would stay short and look for a move down here to 171. I think there's more room to fall, and you can see this big volume over price void here. There's really no technical support in this area whatsoever, so I think that's going to fall further. When we move to the miners, it gets a little more interesting because we do have a layer of support here at 37, and with gold having more room to fall, there's a distinct possibility that GDX may break this 37 support, and if it does, then it's probably going to have a fast trip down here to the 200. So if you're in GDX short, I would play it by ear. And what I mean by that, watch how price behaves tomorrow around this 37 mark. And if you sense a bounce, if you see a bounce, watch gold, see what it's doing. And, if you get that break, if it slices just right on through it, obviously stay short and look for the 200. If you sense a hesitation or a bounce, you can decide if you want to hang with the trade or just close it out for the win. If you're not in already, your next opportunity would be on a break of 37. Hard to say how far it might fall, but I think there would be some solid support here at the 200. So you'd have to decide if that's worth it, trying to play for a couple bucks here or not, or just wait to position long, because I do like gold long term. It's just the stars were aligning, and I didn't like what I saw. Heading in, talking over the weekend, we didn't want to try that long last week. So we're gonna get a good entry point wherever that may be, wherever gold decides to settle out, and then we can position long. This is the SPY 4-hour. And I think it's important every once in a while to look at different time frames. You see different things emerging that you don't see on like a 30-minute chart or even a daily chart. I think this gives a nice view of this down channel that's forming on the 4-hour and the possible support levels below. We've got a level here at 317.50. That could be possible support if we lose the low from Monday, which was 322. That would be a spot where we may find support. And, if things fall apart, we could be looking into the 312s, the 310s, the 308s, down in that area as potential targets down the road. You can see here in the RSI we're not oversold yet. We can see on the PPO that we're definitely in the bearish regime. So this downtrend seems firmly intact, at least for the moment. So I thought that was a really good look. Now here on the 2-hour chart, it just shows what happened today. Got rejected at the 50, which is off the daily chart at 331.18. Got rejected, came right back down to Monday's low. So tomorrow, that's your key location. If we break below 322, we go lower. And if the bulls can step in and save it, then they may be able to, bounce it back up to the trend line. Moving on to the Qs, this is the daily chart. We can see that the little breakout here was a whipsaw. It got above the 50, then was rejected below. So now we're below the 50 and just above the recent low. So that's going to be a location tomorrow where we need to key off of, holding the prior low will, be important. If we break it, then we go lower. Call your attention to this 38% fib pullback is at 255, which is right here. That would be the next logical area of support if we go lower. And who knows if it'll be tomorrow or down the road. If we were to break that level, the 50% pullback is 235, and that aligns really well with the 200. And, I think it's important to keep in mind that, if the 200 holds, the bull run is still intact from a technical standpoint. I know nobody wants to, see that 50% pullback, but that's pretty common in technical analysis to see that in price action. You make an advance, you give half back, and then you launch the next leg. So for all the the bulls out there, this is common stuff. We're not even back to a 38% fib. So this is, in the whole scope of things, this is nothing. So the sky is not falling. We're just in a pullback period, and we'll see, how far they want to push it, whether it's, down here to 255 at a 38%, or if they want to go back and tag the 200. That would be, well within reason. So keep it in perspective. Here's the 4-hour chart, just gives you a different view. And no two ways about it. That was a classic head fake. It shook me out of a couple positions that about. And then they reversed it. So, at the end of the day, that's trading. You got to respect if levels are recaptured from below, and price did that. If you start saying on every kickback, oh, well, it's fake, the next 3 bars can be green, and then you're hurting even more. So you've got to take the signals as they come and do the best job that you can interpreting them. But whipsaws are part of the game. You just got to get back in and get back on the right side of the trade. And now the right side, at least for now, is lower. IWM, this was a beautiful trade. There were no whipsaws here because IWM never kicked back to the degree that the Qs did. So this kickback to resistance, that was a great place. A high probability, low risk trade where you could set the stop just above, and then it fell down. So tomorrow, the key is this gap. And unless the bulls can step in right here at this gap entry and hold above, I think it's going to fill here to uh, down to this 141.83 area. It's about a $3 gap. So that would be a nice trade, even if you're not, if you're not in it now, if you didn't hold anything overnight, if it doesn't gap lower on the open and stays pretty flat and then fails, that would be a great entry to see if you can get that $3 gap fill. Facebook, right back down to this big $15 wide gap. Tomorrow, if it re-enters, I think you can be short again, and then see how it handles this 245 at the prior low, whether they hold that or it lets go. Of course, here they can always bounce it back up to the downtrend line or this 255, but pretty weak price action overall. Apple, this was one of the ones that I got shaken out of yesterday. We were in 105 puts, and now it's back to the place where it was the other day when we got in the trade. So that's just the way it goes. If you put the trade back on, that's great. I think you're in good shape, whether you initiated it up here on this break of 109, that would have made sense. I ultimately think that price will find this 96, and I'm not going to be afraid to put that back on. I should have done it today, but I didn't. I think it's going to go lower. I think it's a source of funds, and I think it heads ultimately lower. Amazon has been a great study in technical analysis and levels. We've talked about it a million times. Came up to 3150, was rejected. Once it lost these intermediate levels, almost an instant $50 pullback. Now tomorrow, this 29.75 becomes critical. If it can hold it, the bulls have life. They can kick it back up to this 30.50 and beyond, depending on what the market's doing. But if they lose it, I think we're right back down to the prior lows, down at 2,900 or thereabouts. Doesn't say it needs to happen tomorrow, but once you lose the level, then you can stay short against that level and look for lower prices. And then if the prior low is lost, down here at say 28.75, then you're off to the races with a fresh down leg. Microsoft came back up. Once you lost this level, that was your short entry. Came back down and lost 202. So now you can stay short against that level. If you didn't roll down, you could keep your, lower your stop down to just above 202, say 202.50. And right now you're looking for the prior low down here at 197. Google, we haven't been paying much attention to, but it had a bad day and is now sitting on the 200. Just for, sentiment, it's going to be real interesting if Google can hold the 200 or if it fails. I'm not saying that would be a tell for the whole tech space in general, but it's one of the big five. So if it can't hold the 200, where does that leave the other ones? that are still well above the 200. Does that mean they're coming, that's their destination? It's hard to say, but it can't be good if Google loses the 200 and starts coming down here to 1350 and 1300. That wouldn't be a good sign at all. Netflix, this has been so nice as far as trading goes. Level by level, 485. I think midday we talked about 485, and then your target was 475. That was accomplished and more. Now you're at this you're looking for a break of 465 and coming into the prior lows at 460. And we said earlier when we looked at the daily charts that the 200 comes in at 430 and there's technical support at 420. So if this prior low fails at any time in the future, then you got $40 of downside that you can play for and just ratchet down your stops as you go. And that would be, a tag of the 200 down here. But real nice technical action, level by level, exactly what you want to see. Tesla, we may have a change of foot here, having lost the trend line and this key support level at 400. Now we're looking at a tag of the 50, which is at 363. That's going to be a key place if you're trading it or watching it for it to hold. Normally, you expect a first tag of a key level or key moving average to hold. So there may be an initial bounce, maybe even a bounce back up to 400. It's the second time that it comes back through is when, there's much higher odds that it just slices through. But we'll have to see how that plays out. But I would expect a tag of the 50 here for Tesla. I got a rude awakening this afternoon, and I missed it on this SCPL that we're in. I had checked it, and it was down 1%. And late in the afternoon, obviously it let go. I either missed the alarm or whatever, but I did not see that. I did not get an alert out to you guys. We got to close that position. It failed, and I don't know if that was a double top or just because of the market action, but to me, that's a failed trade. I don't think we lost that much on it because we entered down here at 15. If you want to hold it, be my guest. It was doing really well, but that's how it always goes. It does really well until it doesn't, right? So I will probably close that trade and then alarm 16 for a breakout. But if the market's going down, probably a little much to ask for this internet stock to, race higher. It was defying all odds in here, and then finally some profit taking or whatever caused it to drop. So decide what you want to do on that one if you've got it. Maybe you had set a tight alarm and you caught it and got out with a nice profit. If not, then I would just close it for a scratch trade tomorrow. This Nutrien that we're in was doing great. They pulled the rug. It's still above our buy point, I believe, at 39.5. Anything below the 20, below today's close. That should hold. If it's going to hold, it needs to do it now. If not, I'd close it, and we'll reboot. Um, reboot later if if all these resource stocks are going to get hit, even though ag commodities are not really tied as directly as the metals. um, they are going to feel that dollar going higher. So if 39 and a half holds tomorrow, it's fine. We're still in the game. But if it loses it, there's no sense, holding that trade. So I would just close it. Um, those are all the charts that I have uh, this evening for you. I hope the recap kind of filled you in on where we're at, bigger picture, and what to look for tomorrow. And I want to emphasize to you guys, or kind of bring it to your attention, it's really easy when markets are moving fast to get distracted with all the stuff that's going on, this stock, that stock, this one's going parabolic up, and all the chat rooms and all that stuff. I really urge you, stick with the stocks you like to trade. If you're an active trader, there is boatloads of money to be made if you focus in on a handful of stocks that move, get to know them really well, own the levels, know exactly what's going on at every level, and then focus on execution. It sounds simple, but that's all you need to do. Focus on execution, block out the noise, know your levels, honor your stops, and look for your targets. There's been a mountain of money to be made the last few weeks, even before that, forever, but especially in the last few weeks in these market leading FANG stocks, simply because they're the ones that are really moving in both directions. And it's really important that you not lock in, to a certain narrative. It's okay to have a bias. I mean, if all the indicators and technicals are pointing lower, you should have a lower bias, a bias for lower prices. And as we said, we've been looking to sell the rips. We just got whipsawed yesterday, and I apologize for that, but it happens to anybody. I thought it was going to go a little further than it did, but that's a sign of bearish price action when the bulls can only put in the whole scope of things, a very weak bounce before they pulled the rug. That's a sign of bearish price action when they can't bounce it materially higher and hold those gains for even 24 hours. That's bearish price action. So pick your spots, pick your stocks. If you focus on that and focus on execution, you're going to make a lot of money. So resist that FOMO temptation of, jumping around to stocks that you don't particularly know well, and focus in on things that you can trade well, that you really understand. And this can be a really, really great time for you as a trader when stocks are moving and you can get, $5 in an afternoon on an index. I mean, these are the times that you wait for as a trader. So take advantage of it as best you can, and only trade in the size that you're comfortable with. Don't load up, um, and get out over your skis thinking you're going to make $1 million. It'll just scare you when that first, bar goes in the opposite direction and shake you out of the trade. Um, Another thing that we've done a lot of work on in the mentorship classes is hide your P&L. If you are sized right and you know your risk and you're comfortable with it, you don't have to watch the dollars go up and down. If you focus on the chart and you trade the chart well, your P&L will take care of itself. So keep both eyes on the charts and hide your P&L, and that, I think you'll find that a great advantage to you. And some of the people that have done that in the mentorship group are truly reporting added confidence and results by not splitting their attention between the money going up and down and focusing on the charts. So size yourself right with a comfortable amount, honor your stops, and you don't have to worry about the money. That'll all take care of itself. And at the end of the day, I think you'll be pleasantly surprised at how it turns out. Okay, I hope you guys have liked the content, especially those new to the channel. Please hit the like button and subscribe. I'd really appreciate that. Jump over in the show notes. You can find links to the blog and to register for all my content. It would be great to be able to send this stuff to you each and every time I publish, right to your email box, so you won't miss a thing. So have a good evening. Get lots of rest. Be ready to go in the morning, and we'll pick it up then. This has been Chris Buss with Traders Profit Compass. Have a good evening, and talk to you next time.